Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's September 20th, I believe. Yes, September 20th. And this will be our chart lesson for today. And it was an FOMC day to begin with. It looks like a hugely bearish day. Looks really good on the daily chart. Uh, we really sold off on the intraday chart, but most of that came during the volatility. We did, usually. Well, let's flip over there. You can see how bearish it looks here, but let's flip over to the 2,000 tick chart. And here's this chart, and you can see this is what will happen a lot of times going into FOMC. You get in these little tight ranges like this, and they're just, it's really hard. Sometimes you take a trade and you get stuck in it, or you get stopped out, and then you go into this news item, or you're still hanging on, and then the news comes out and you get blown away. Don't trade. Be flat at least an hour prior to FOMC. It's just smart. Be flat an hour prior, and don't try trading this stuff. When you see this right here, you just get chopped to pieces. People sending me their chart and they got second entries in here and they're counting second entries. Definitely don't be counting second entries in that, because you get second entries in both directions and they just, neither one of them work, and you just chop yourself up. You're lucky if you can get out with any skin in the game. So FOMC days are just not really good prior to that news coming out. Doesn't mean that you won't have some movement. Some days you'll get some movement, but most of the time it looks just like this, and it's not worth trading. And then the news comes out and it gets all haywire and wonky, and generally you got to wait 15 or 20 minutes. Literally by 120 a day, it kind of settled down a little bit. It's still a little bit uh, volatile here. What'll happen is usually they'll take all the news back within the first hour, and the market kind of resets, and then it does its thing, and then we trended down from there. So the afternoon today was pretty nice. Normally I prefer to trade the mornings, but on an FOMC news day, you need to know when this stuff's coming out. If you follow me, if you are a member of our premium membership, you get your chart every day, and I tell you when there's an FOMC. I talked about it this morning. Told you to be flat an hour prior. That it's that little $100 a year it costs you is probably worth it to have it just to know when the FOMC news is coming out. So be aware of these news items. That's all I can say. Uh, don't try to trade this stuff, because I had several people contact me taking trades in this stuff, and they got chopped to pieces, and they can't figure out why, because the market's waiting on this news to come out, and it's just dumb. I shouldn't say that. It's people that don't know any better, taking a few trades in here and just fighting it out with each other. That's all it really is. It's a bunch of weak traders fighting it out with each other, and the smart traders are all on the sidelines waiting for this to happen, and then they take advantage of it. So just be really careful trading on FOMC days. Honestly, you're probably better off. You could probably trade from about 7 to 9, and you can see here from about 7 to 9, even then there wasn't much happening. But really from 9 o'clock on, just stay out of that. Definitely don't take any new trades before noon, from noon into that news item. Because if you can get in, as you can see here, you could have got in at 11 o'clock and you'd have been stuck in that. Um, Maybe you're on the right side, maybe you aren't, and then the news comes out and boom. And you definitely don't want to be in there when that news comes out. So you need to be flat prior, and just don't do it. Just sit tight and wait till after the news, and then when it settled down and you had this nice trend, it was some pretty good trading in there. So not many trades today because there's just nothing here. So anyway, 7 o'clock came right in here as we're pushing up. Maybe you go, I mean, this is a possibility. Maybe you say, okay, we're so far away from the EMA. There's a 2-bar matching high. It's a very bearish bar. Maybe I go short there and just try to ride it back to the EMA. If you took that trade, you're probably done before 8:30, and you can go home and don't have to worry about the news and all this sideways tight stuff. So maybe you take that trade. It's a little aggressive, but that's really the only thing I see early on there. And then we start trending up, but there's just nothing here. Maybe this one right here, there's a first entry, second entry after a break of this, and you could also call that a triple test across there. It's not a perfect signal bar. There is room to scalp out. You could say it's a triple test as well. You could also call it, there's a double bottom here, so you could call it a first entry, second entry failure as well. So there's several reasons you might take that trade. Um, then you get a move up. I think it's too risky to go short right there, and then you make a slightly higher high here. Again, you're making higher highs here each time, so I think it's a little risky to go short on that one. This one, there's not enough room really to scalp out here. You don't want to go short into that support. Turns out to be a good move, but you just don't know that in advance. And then we're just chopping along here again. And I just don't see anything I like. There is a lower high right here, but look, it's right into the midline that's been holding for 1, 2, 3, 4, 5, 6, 7 attempts and hadn't got through there yet. So don't risk that. And then we finally do get down there and we bounce. I don't. This is a doji. It's an inside bar. It does make a 2-bar matching low, so you could call that a double bottom. But we're trending down. We're making lower highs and lower lows every time. So along there is not really the right thing. So if anything, you might want to go short here. If it would have broke lower in that bar, I'd say, hey, take that short. But then you get an inside bar that's kind of neutral. So you can't really risk going short there. Turns out that you get a nice move, but it's not worth risking. And we do break out here and it fails, but there's no setup. That's too congested, too sideways. Again, you do get another second entry here. Notice the new high, first entry, second entry. But look how sideways that is and congested, and there's not enough room to scalp out. And you're also going along right to the midline of that channel. Not a great idea. And you see what happens. It goes up. It reaches that high, fails, comes back, and it would have stopped you out. Now maybe you got a triple test, but again, you don't have room to scalp out right there. You've got too much resistance pushing against you. So, and you're almost at noon. It's just not worth risking that. Just sit tight. Yeah, this one worked, but I wouldn't take it. It's too risky. And you run up and then you just chop. And this is what happens if you take an 11 o'clock trade. There's no way to get in. If you got in that, there's no way to get out of it until after 12. Yeah, you would have maybe got out of that by the skin of your teeth. But it's so risky getting in, because a lot of times right into 12 it'll look just like this all the way across to the news hits, and there's no way to get in or out. And if you're in it, you're stuck in it because you can't scalp out, you can't get out without taking a loss. I would say even if it's a point loss, take your hit and get out so that you don't get something crazy happen to you in the news and you lose your whole account or something. So most of your brokers are up in your are up in the, I don't know if Ninja Trader's doing it or not, but most of your brokers are up in the margin during news like this, because it's so volatile and people don't know any better and they try to trade and they lose their account and then they owe them more money than what they had in their account, and you just can't afford to do that. And that's why we day trade for the most part, because generally you can get in and out of trades without any problem, and they'll cut you out of your trade before it's too late. But when you get moves like that, when one bar in seconds, you could really hurt yourself. So you got to be real careful. So all this is blacked out during the news. It kind of settled down by here. It looks like it's settling down, and you do get a first entry, second entry. You barely probably got room to scalp out there. I marked it green. Maybe you take that trade. It's bright. Notice it's back inside the overnight support, and it's tested it a couple of times there too, second entry. So maybe you take that one. Again, I'm not super crazy about it, but excuse me, but maybe you take that trade. You see it comes back really quickly, bounces again, but there's no setup there because that's your signal bar and it's too bearish. Runs up, you get a close outside, a couple legs up to a new high, and you get this small, I think it's 5 ticks. Maybe you take that one. Again, you're taking a little bit of a chance here because you don't know that this correction's over yet. I prefer a lower high, and you may not could have gotten that one anyway because it just the bottom fell out and it just drops and goes. So, but if you could get in that, maybe you take it. The better trade is here when you get a second entry short. Now you got a double top. Notice the new low, first entry, second entry, fairly decent bar, plenty of room back to the EMA. That's your better trade. And you see that would have been an easy trade. You probably get a runner on that, and maybe that's the only trade you need for the day. You had to wait till after 1 o'clock to get it, but that's the safer, best trade of the day. This is a hidden second entry here. Not a great signal bar, and you really don't have this trend line confirmed, so it's a double top right in the middle of the range, and we haven't hit the lows yet. So maybe you take that trade, and I wouldn't take it. I think you could call it a triple test too. So that's another reason. Maybe I'll mark it green. We'll see. But I think you skip that trade. A lower high here, but you can't take that. Too congested. And it looks like it may bounce here, but you made a new low. Notice how it's lower than all these last few lows. Just sit and wait and see if you get a higher low. And notice you don't. And that would have kept you out of another loser there. Plus, you still got this channel in play, and you hadn't had a break of it. You finally get a break and new low, and then it bounces. And notice what happens here. You get a leg up, a correction, second leg up, and a second entry long that confirms that trend line, a big, nice bearish bar. That's an easy trade. Simple, following the basics, and you got an easy trade there. And then you get another one right here. Notice you made another new low. And you get a first entry and another second entry with a big bearish bar right at the key entry point. Another quick, easy scalp. Just make sure you have room to get out between here and there. If you do, take it. Then it comes back and you get a lower high here. That qualifies as a lower high. Another great signal bar right at the key entry point, and you still got room to get out. And if you take that, boom, another easy trade. Just stick to the basics. Even this one, I did not mark this. It's too congested. It's too sideways. Lots of dojis with no bodies. But there's a second entry short there. Notice that low, first entry, second entry. If you took it, it works, which most second entries with the trend do work. It's not at a key entry point. It's not at the EMA. It's not at the trend line. It didn't really test this but once. Maybe you call that a weak test. I think it's risky, but if you took it, it works. And even here, there's another second entry. Notice the new low, first entry, and then it turns higher again. So when it comes back by there, it's a second entry. The signal bar doesn't qualify. It's congestion. I wouldn't take it. But again, if you take the second entries with the trend, they generally work. And that would have been another easy trade, but it doesn't qualify for an entry. So just forget what I said there. But then you make a new low, first entry, runs back to the trend line, second entry. Plus you got a trend with a break and a move to a new high right at the key entry point, another second entry, and boom, another easy trade. There's a lower high here. I don't know whether this broke lower or broke higher first and then turned lower. So if you entered on this one, you got stuck with this engulfing bar, which you move your stop to back here and wait for it to close and then move your stop to one tick over here, because otherwise you may get stopped out of that depending on how it broke first. My guess is it might have broke lower. I just don't know. It could have broke higher. I was not watching prices at 2:30, so I don't know what it did then. So I'm not familiar with how that one broke, but that's the way I normally, if you're confident in your trade and you get a engulfing bar like that, you're just move your safety stop to the previous high, put it there and wait for this to close and then move it one tick above it. And generally, if your read is good and you're trading with a trend off the key entry point, you probably still survive it and turns into a good trade, which that would have. So, and it is a second entry short when it broke below there. I just don't know the timing on that one, unfortunately. I didn't draw this past 2:30 much, but you see it continues to, this trend line continues to hold all the way in. We finally got a convincing close outside after the close. The whole day we never had a convincing close out. I mean, that's just as easy as it gets right there. into 230 especially. So anyway, that's how I saw it today. Be careful on these FOMC days. Know when the news is coming out. Know what's going on. Be wise. Don't trade blindly. Get you a news. I mean, I know every morning because I have a news indicator. I don't go try to dig that. But if you don't have one, there's places you can go look at the. Uh, Most of these, there's a couple of these forex sites that have daily news and it shows the news. All we're worried about is the high volatility or the red U.S. news for trading the ES. I mean, if you're trading something in overseas, you'd want to know their news stuff too, but we're not interested in that because we're only looking at the ES here. So all we're interested in are the high volatility, again, the red ones, um, in the U.S. news. And know when they're coming out and be flat just prior to them. Most of them you can be flat 15 minutes prior, but this FOMC news, FOMC, be flat at least an hour prior, and maybe even consider not even trading until after that news on those days. It's wise. You'll save yourself a lot of headache and heartache. And I had people blaming, saying the mornings are just harder than the afternoons. Well, that's not it. It's the FOMC. It's because this news is coming out, and most people are smart and sit on the sidelines. Smart traders are sitting on the sidelines. They're waiting until this is over, and then they're taking advantage of that trend right there. Patience, discipline, and patience. That's usually the once you learn how to read this chart and kind of get a basic understanding of what we do, the rest of it just comes down to patience, discipline, and experience. Just being used to knowing what's going on and learning. Most time you learn the hard way. Education is expensive, especially a trading education. So just keep that in mind. But hopefully most of you have been around with me for a while and you took advantage of today rather than getting taken advantage of. But if you tried trading this and you struggled and you wonder why, it's probably because of the news item. It probably didn't have anything to do with your trading other than you were impatient, you pushed trades, you're trying to make a trade when there's nothing happening, you're trading in junk like this, sideways congestion. Just stay out of that stuff. Wait till the market looks like this or, trending up like this. But once it starts going sideways like that, unless you're consistently getting good trades here to go long or good trades here to go short, stay out of it. And I mean, even then, that's not very wide, so you don't have much room for error. You want it to be shorts off one up here and longs off one down here, because then you got plenty of room. So just keep that in mind. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll